Hello, everyone. Bonjour tout le monde. Thank you so much for joining us for today's webinar. Welcome to the Adapting of Evolving Distribution or Disbursement, Quota Regulations webinar. I always think of it as the DQ, but here we'll say the full terminology of the disbursement quota, and where we will dive in and provide you with the latest updates and amendments to the disbursement quota regulations, and also learn how to implement effective systems and processes to meet the disbursement quota obligations while still aligning with your community foundation's purpose. It is absolutely lovely to have each of you with us today. So do take a moment to introduce yourself in the chat while I'll take a moment to introduce myself and to share a few housekeeping items with you. For those of you that I've not met, my name is Tracy Vavrick, and I'm a member of the CFC team, and it is an absolute pleasure to have each of you with us today. Today, I'm joining you from Vancouver on the unceded traditional territories of the Squamish, Tsleil-Waututh, and the Muskimum. I know I may not have pronounced that correctly, nations, but I'm so grateful for the opportunity to be where I am today on these lands. Yesterday, I spent the day with a group of community foundation leaders, and we spoke of the importance of pausing, learning, and listening, and how essential these are for building relationships. I've held space for the importance of the Indigenous history of where I am today. I don't know the history, and I'm curious, and I am committed to expand my knowledge about the history of these lands. Today, before I fly back to my home community of Calgary, my intent is to take time to walk and hold space for the lands that I'm sitting on today, to understand it, to learn more, and to be curious. I'm mindful that we have community foundations that operate from coast to coast to coast are with us today. And while we may be connecting from different locations, it's important to remember that we have a responsibility to acknowledge the land and the original peoples of that place. So thank you so much for joining us today, and I hope you can take a moment to consider your own connection of the land that you are on today. I also want to express my deep gratitude to each of you. You are joining us today to develop and to learn and to continue to advance your foundation. And I thank you for your commitment to strengthen your foundation and how you continue to do so with your teams, if it's staff, board, etc. So thank you for being part of the Learning Institute curriculum and being part of today's webinar. So before we dive into the webinar, I just wanted to share a few other housekeeping items. We are currently in Zoom webinar. And so just as a friendly reminder, as we are in this today's webinar, we are mindful that we can hear each other and you can hear us, but we cannot hear or see you. So please, if you have questions, please use the chat and pop the questions into the chat box. This session is also available in both English and French, and to access the French and the English interpretation, you'll see a globe at the bottom of the screen, and you can select between the French and the English. You're also able to access the slide deck of English and in French. So if you go to the very top of the screen, you'll see view options, and you can click the arrow between, and a panel will appear. And when you go down to the bottom of the panel under the shared screens, you can select between the English slide or the French slide. And I just realized I made an error that we're actually in Zoom meeting mode. So I'm mindful that we are in meeting mode. So as we are in the meeting mode, please do keep your microphones muted. Please, I can see we've got some cameras on. It's wonderful to see the beautiful faces that we have of community foundations with us. This will just help to ensure that with the mute of your system is used, it'll help to ensure that our presenters can provide the best information to you as we go through today's webinar. Now, I am extremely excited to introduce the team that we have with us today from Miller Thompson LLP. We have Susan Manwaring, Christina Roberts, and Sarah Fitzpatrick. I'm mindful all of these members are very familiar to each of you, and it's an honor to have them back with us today. Susan, you are joining us today from the Toronto office, and we thank you for doing so. And for those of you that have not met Susan, Just to share a little bit about Susan, she is a recognized leading expert advising social enterprises, charities, and nonprofits in her practice. Susan provides both general counsel and specialized tax advice to her clients across Canada and internationally. Susan is the national lead of the social impact group of Miller Thompson. We're also joined today by Christina Roberts, and Christina is based out of Calgary. Hello, Christina. And it is an absolute honor to have Christina join us today as well. And Christina is also a member of the social impact group of Miller Thompson. Pardon me. And she's passionate about helping build impactful and sustainable social purpose organizations. Christina gives general advice to charities, pardon me, sorry about that, to charities, nonprofits, and social enterprises. She has a particular interest in developing innovative structures for social enterprises. And we are also joined as well with Sarah Fitzpatrick. Sarah is joining us from the Vancouver office. Sarah, I wish we were closer together. Maybe we could have been in the office together today. But Sarah, so welcome to you as well, Sarah. And Sarah's practice focuses on the areas of charities, not-for-profits, and trusts. Sarah provides general practical legal advice to these clients to assist them in carrying out their missions and also their mandates. Sarah counsels charities and not-for-profit clients on governance matters, tax and regulatory compliance, as well as social enterprise and gift planning. Sarah also assists clients with general corporate legal matters, including major transactions and restructuring. As you can see from the information I've shared with you about each of these members, they come with immense knowledge and understanding of the charitable sector, of legislations, and also the community foundation work. It is absolutely an honor to welcome each of you with us today. And we are very grateful as well on behalf of CFC and all of the community foundations for our partnership and our ongoing commitment to work together to support the network. So thank you so much for your dedication to be part of today and the ongoing work we do. I'm honored now to turn today's session over to Sarah and Christina and to look forward to hearing today's presentation. Welcome.
Thank you, Tracy, for that very kind introduction. So yeah, we're happy to join everyone today. We're going to be discussing the topic of adapting to the evolving disbursement quota regulations. The changes came into effect in 2022. We haven't heard a whole lot about them from CRA since then, but we will update you on everything we know and the implications for your foundation. So just going to the next slide. So this is our agenda for the webinar today. Firstly, I'm going to provide a quick refresher on what the disbursement quota is and how it's calculated. And then I will go over the 2022 amendments to the Income Tax Act. And then I'll turn it over to Sarah to provide some more detail on how the changes are being implemented and what they mean for community foundations in practice. Susan is going to be monitoring the chat throughout, and feel free to pop your questions in there, and she may be able to address them throughout the presentation, or we can have a discussion at the end as well. Okay, so as a reminder, the disbursement quota is the minimum amount that a registered charity is required to spend each year on either its own charitable activities or qualifying disbursements. So it used to just be the amounts that it spent on its own charitable activities and gifts to qualified donees. But now we have the new qualifying disbursement rules, which means that gifts to non-qualified donees can also count towards the DQ if those meet the requirements of the Income Tax Act. So the amount of the disbursement quota for each charity is calculated based on a percentage of the average value of the property not used directly in charitable activities or administration for the 24-month period before the beginning of that fiscal year. So for charities that are designated as charitable organizations or public foundations, which I believe most of the community foundations would be, the calculation starts after the first $100,000. So the first $100,000 is exempt, whereas for private foundations, it's the first 25,000 that's exempt. Sorry, I'm just seeing the slides in French, so I'm just gonna. Okay. Okay, so just on the next slide, please.
Christina, go to the view options up above and you can make it go to English.
Okay, perfect.
Up above, I couldn't find it either. So
thanks, Susan. Okay, so yeah, not to get too technical into the weeds, but we just wanted to point out kind of how this calculation works. So how is the average value of applicable property calculated? So basically, on the first T3010 information return, a charity needs to select how many equal periods it would like that 24-month period to be divided into for the purpose of calculating the average. So it can be anywhere between 2 to 8 equal periods. And the purpose of this is just to account for the fact that the value of property and investments will fluctuate over time. So basically, once you've decided how many periods, the value of the property is determined during each of those periods. And then those amounts are added together and divided by the number of periods to determine the average value of the property. And just a note to make sure that once you've decided on the number of periods you're going to use for this calculation, you should take a consistent approach going forward. If you want to change the number of periods you're using to calculate the DQ, you have to get approval from CRA. So it's just best to just use a consistent approach. So next slide, please. And the other critical part of the calculation is understanding which property is not used in charitable activities or administration. So this typically includes amounts in endowment funds, investments, real estate, funds that are, just not being used, but you should consider all of the property in this. The distinction isn't always clear because sometimes property can be used for multiple purposes. So we have an example here. If there's a religious organization that owns a church and it uses that church for regular services, that would be used for charitable activities. But sometimes a portion of the building is used for other purposes that aren't charitable. So like being rented out for community use, for example. So in that case, the value of the building should be prorated, and the portion that's not being used for charitable activities would be included in that DQ calculation. So next slide. So now I'm just going to go over some of the changes to the Income Tax Act that impact the DQ. So basically, it doesn't impact how it's calculated, but there has been an increase in the rate. The changes were brought about as a result of the federal budget from 2022, and these provisions came into effect on December 15th, 2022. So next slide. So the amendment introduced a new graduated DQ rate, and it applies to fiscal periods that started on or after January 1st, 2023. So the rate is 3.5%, which it was before. That's on the portion of the property up to $1 million. And then it increases to 5% on the portion of property not used in charitable activities or administration that exceeds $1 million. So again, the calculation is the same, it's just a different percentage now. So next slide. So to satisfy the disbursement quota, charities need to spend money on charitable activities or qualifying disbursements. There are now additional lines on the T3010 information return relating to grants to non-qualified donees, because those can now count towards the disbursement quota as well. And we did hear today about it, a new T3010 form being released with some additional information, which I think Sarah and Susan might touch on a bit later. Another change that occurred as a result of the 2022 amendments was a provision stating that expenditures on administration and management are excluded from the calculation of the disbursement quota. So this isn't really new, because CRA has taken this administrative position going back, but it's now codified in the law. So it's something to pay attention to. So next slide. And this is just some text from the budget documentation related to the changes. So this was the impetus for the legislative change, and it states that the categorization of a particular expense is a factual determination based on the activities and practices of the specific organization. So there's some gray area as to what's going to count towards the disbursement quota. And Sarah's going to get into a bit more of the details on how those determinations are made. So I'll just turn it over to her now.
Thanks, Christina. If I could have the next slide, please. So as Christina was saying, when a charity is expending resources and it's trying to determine whether it's meeting its disbursement quota, is it expending at least that 3.5% to 5% each year, it needs to be making expenditures on charitable activities or on qualifying disbursements. And the Income Tax Act was amended to say specifically that administration and management expenses do not count for expenditures on charitable activities. And while that was put in, so when that was put into the act, there was rumbling about why is this change coming out? But it's actually consistent with the CRA's approach to how you determine what expenses count for disbursement quota, that the CRA already had this approach to it. And where we can see CRA's guidance on what type of expenditures qualify for disbursement quota is in its guide on how you complete the T3010 annual information return. And there isn't that much detail in there, to be honest. So what we have in place right now from the CRA is a list of certain types of expenses that are examples that it says would count towards administration and management, and a list of certain types of expenses that would count towards charitable activities. And so for administration and management, some examples are expenses related to board of director meetings, accounting, auditing, professional fees, human resources salaries, supplies and equipment, expenses incurred for application for grants or other types of funding, and then occupancy costs that a charity might have for administration services. So this is talking about, expenses related to its building or its lease that would be for space that the charity requires for its administration activities. CRA also has some examples in that guide of what would be considered charitable activities. So expenditures on running day-to-day programs, education and training for staff and volunteers, most salaries, and then occupancy costs for buildings that's used for charitable activities. So there's clearly some overlap between these two categories. We've got expenditures, for example, on buildings or salaries, where there's some expenditures that might be administration and some expenditures that might be charitable activities. And coming out of the budget from 2022, CRA said it was going to be doing consultation on this, on the distinction between what type of expenditures count for charitable activities, and that more guidance would be forthcoming. If I could have the next slide, please. So I mentioned that the guidance on how you characterize expenditures for determining whether or not charities meeting its disbursement quota is in the guide to the T3010. And what that guide says is that some expenditures might be partly charitable, and they might be partly management and administration. And going with that example Christina had previously, where we've got a building that maybe a church uses, for example, could be partly used in charitable programming, partly used in its administration, and or for other non-charitable activities. I should say that I think the example was on renting out to the community. But in that case, the characterization of the expenditure should be divided and to the different lines as appropriate. And when the charity is determining how to divide or allocate the expenditures, it should be taking a consistent approach, and it should be making a decision that's reasonable when it's making that allocation. If I could have the next slide, please. So the Canadian Handbook for CPAs also has guidance on how to allocate expenditures for nonprofit organizations. This guidance is on just establishing the disclosure standards for nonprofit organizations, and how the expenses should be characterized by function. It's not a guide per se on how to complete the T3010 form, but it's another source out there about what might be a reasonable basis to take on how you allocate expenditures. So in the CPA handbook, there's some guidance in there on fundraising expenses and general support expenses. And in the context of fundraising expenses, the handbook says that if those expenses are specifically directed at another function, for example, education, then the fundraising expense might be allocated to that education component. But when making that determination, there must be a reasonable basis for making that allocation. And I will repeat, it also should be done on a consistent basis. And similarly with general support expenses, which is overhead, like expenses, the charity might be taking those expenses can be considered either a function in their own right or allocated to the relevant function that they support. But again, the approach that charity needs to be taking is whether that's reasonable to make that allocation to the function that they support, and the process must be done on a consistent basis. If I could have the next slide, please. And so the only other really place there, CRA has spoken about, what its administrative policy is on how it expects charities to allocate expenditures on ruling documents. So there is a CRA ruling from 2006 where it talks about expenditures that are have partly attributable to charitable programs or might be partly attributable to management administration, and it refers to the guide, which we've mentioned previously, that it, in that case, might be necessary to allocate those expenditures between the two categories, and it should be done on a consistent and reasonable basis. But as you can see, we don't have a lot of existing guidance on how these expenditures can be characterized. And so this is what we have currently, what was come out from CRA. If I could,
Sarah, just on that, I just wanted to share a historic sort of example of this kind of reasonable and consistent approach. Everything Sarah said is about as much as CRA will tell us, because they're not going to give us specifics on how to allocate between charitable and management. But we used to run into this issue when the Act required organizations to identify if they were spending money on what they called political activities in the past. This isn't necessary anymore, but the experience on audits was exactly what they looked for is that the charity used the same method of allocation every year, and that it would be reasonable. But I think consistency is huge, because if they feel like you're allocating things to management and admin one year and then differently the next year in order to satisfy your DQ requirement, then they might start to challenge it, because they'll think that you're sort of trying to change your approach because you have to meet, you haven't otherwise met your DQ requirement. But generally, if you adopt everything what Sarah said, something that you've thought through, it's common sense, it makes sense. It might not be 100% accurate. It might not be 100% how they would do it, but generally they would accept it. And they might tell you, for the future, we'd like you to do it this way. But it's, there is some fair flexibility there, as long as you have in your files a rationale for the approach you're taking. The other thing that I feel about this change, just from my experience, is if CRA puts out guidance, they're probably going to put out guidance that is more restrictive or allocates more to management and admin than we might think is actually reasonable and logical in the circumstances. So, although we would like them to say something more about this, we don't want to push them for any black and white answers, because I think that they would be more conservative perhaps than necessary. And when I say that, I'll give you two examples. One is like a CEO salary. In some cases in a charity, you might say that that all the CEO does is management and administration. But in other charities, the CEO may be directly involved in a lot of the charitable activity because of the nature, the size, the kind of work they do. And so if they came out and said anybody in the executive suite office is management and admin and everybody else is charitable, that would not necessarily fit. So we sort of, it is desirable to have some flexibility, but for every charity to have to really just turn your mind to it and work with it with your auditors or your accountants as you look through this. Anyway, sorry, Sarah, I interrupted you, and I hope I didn't take anything. I just thought I would jump in there for a minute.
Thanks, Susan. Like I said, we don't have a lot of guidance, but as Susan is saying, that can create confusion about how you allocate expenditures. But at the same time, that can also create flexibility when we don't have very strict rules necessarily from CRA saying this is how this should be characterized. Whereas the charity has then the flexibility with working with its advisors to figure out how should it be characterized based on our current operations, what makes sense, what's reasonable for us. So while not having a lot of detail can make it a bit confusing, at the same time, it's also gives the charity the flexibility to really figure out what makes sense when preparing financial statements in the T3010. If I could have the next slide, please. So this might be quite small on your screen, but it's the part of the T3010 that has the more detailed breakdown of expenditures. And it's the current form that's out by the Canada Revenue Agency. And if you see kind of the top part of the screen, we've got certain buckets of expenditures. And so the charity breaks down, for example, advertising and promotion, travel and vehicle expenses, and it will put a figure with the expenditures that have that characteristic in those buckets. But then when you move down to the bottom half of the screen, there is a further characterization of those expenditures. So this is lines 5,000 to 5,040. The form requires you to say, well, of those expenditures that we've listed above, this is how they're allocated to charitable activities, management, administration, and fundraising. So that's how the form requires the breakdown. And this form is the current one because it also does include qualifying disbursements here, not just grants to other qualified donees in the list of expenditures. If I could have the next slide, please. So as we've spoken about, the charities have an obligation to meet the disbursement quota on an annual basis, and which is a 3.5% to up to 5% disbursement quota. But there might be years where it's difficult to meet that. And so there's a new amendment or a new provision in the Income Tax Act that allows charities to apply to the Canada Revenue Agency to request a reduction in their disbursement quota. And so it basically allows the charity to obtain relief but that relief is for a particular taxation year, and it's granted on a discretionary basis by the Canada Revenue Agency. So it is kind of like a last resort. CRA may not be willing to give it out, and CRA also has the ability to publicly disclose its decisions. So which charities have been granted disbursement quota for a particular year, CRA can have a public list on its website, just listing what charities it's granted relief to. There was a previous rule in the Income Tax Act, which was another version of relief from the disbursement quota. In that case, it wasn't relief from the disbursement quota per se, like a reduction in the disbursement quota. What it was that certain assets were excluded from the disbursement of a charity. And so this was where a charity sought authorization from the Canada Revenue Agency for the permission to accumulate property, normally for a particular project. And when it got that permission, that property wasn't included in the capital base that we use to determine how much disbursement quota has to be met in a particular year. So that rule isn't there anymore. And one of the differences as well is that rule could allow for more than 1 year relief. So you could allow for accumulation over a period of time. So we don't have that anymore. Rather, we have the ability to get general relief from the disbursement quota, but it's for a particular taxation year. If I could have the next slide, please. And so CRA expects charities will be trying to meet their disbursement quota. And so requesting relief from the disbursement quota should be really an option of last resort. It should be for very particular situations. Maybe it's where a charity is trying to accumulate property for a particular purpose, or there's some extraordinary circumstance that has come up that is putting the charity in the position where it's not otherwise able to meet its disbursement quota. And while the disbursement quota applies for a particular year, there is the ability to carry back and carry forward excesses. So if a charity spends more than its requirement on charitable activities, or on grants to or qualifying disbursements, so I'm tripping up over the new language, that excess can be used towards the disbursement quota in other years. So carry back 1 or carry forward 5. So if there's going to be a shortfall, the charity can try to fill that shortfall from that disbursement quota excess. But nevertheless, the change did mean that there is a higher expectation on how much charities have to expend in a particular year. It's gone up from that 3.5%. And so this means that charities might need to revisit their investment strategies to make sure that they are consistently, if they are earning revenue from investments, that they're consistently earning sufficient income that they are going to be able to meet that 5% disbursement quota requirement. Can I have the next slide, please? And so the 2022 budget had also said that the CRA intends to improve the collection of information from charities, and that it was going to make changes to the T3010 and the guide. And this was coming out of the consultation that was done on the disbursement quota. So we don't have any changes at this point in time with requesting additional information. Our expectation is that there might be changes that would ask for information on donor advised funds and endowments. And so this was from the disbursement quota consultation and a potential outcome of it. But as you may be aware, there's been more recently, the Income Tax Act was amended to require T3 reporting on trusts, and there's been a question about how is that going to apply to charities that hold funds. Are the funds that charities hold trusts that need to have a separate T3 form, a trust return? How are charities going to be required to make disclosure on funds? And there's been an ongoing consultation with CRA on this. I know Susan's got her finger on the pulse a little bit more, but today we got an announcement from CRA. I was just going to look at the email where they said that they're going to come out with a new T3010 return for charities with fiscal periods ending on or after December 31st. And so presumably that's a new form that's supposed to be addressing the reporting that charities might have on funds. The announcement just says that there is a new form that's coming out, so we don't actually have it yet.
Yeah, and it's not the T3 announcement. It doesn't say anything about this other question of whether there needs to be a T3 filed for funds held within a charity, but we're hoping that will follow shortly thereafter this particular announcement we saw. So I think, Sarah, the one today is more like you talked earlier about changes to the T3010. That's the one confirming that there will be those changes. And but on the T3, I'm watching my email closely as you speak, but I haven't seen it yet.
Yeah, we heard that it's coming out imminently, or some announcement, but we don't know exactly what that announcement is going to be. So there's, likely going to be some further changes on the reporting on funds. But going back to the DQ consultation, when that was being done in advance of the budget 2022, one of the questions that was contemplated was whether there was going to be an obligation on charities that had funds, that the DQ was going to be applied on a fund by fund basis. So rather than looking at whether the charity as a whole is meeting that 3.5 to 5% requirement, whether each fund was meeting that requirement. And that change has not happened. So just wanted to put any concerns about that to bed. It's when we look at the disbursement quota, it's looked at the charity as a whole isn't meeting its disbursement quota. And when you're looking at your funds, there might be funds that are not generating sufficient income to meet a 3.5 to 5% disbursement. But if there's other funds that are exceeding that, again, it's looked at on the whole and might not be a particular issue if you have a fund that's underperforming with the rate of return. But if I could have the next slide, please, where we talk a little bit more about what you might need to be doing. So there is the change. It's no longer 3.5%. I think it is important for the community foundations to look at your disbursement policy. What language is there in that policy? Does it refer to a specific percentage? If so, probably need to change that to increase it. If it had the old language about 3.5%. And also community foundations should be reviewing their template gift agreements. Some gift agreements would refer to a specific disbursement quota requirement. And if there is a reference to that, and it had a particular percentage, we'd recommend that you would revisit that language, so that you have the flexibility to make sure that there's enough coming out of that fund to meet the disbursement quota. And so that might not necessarily be income. That might be that there's the ability to encroach on capital of the fund in order to ensure that the charity is meeting its disbursement quota. And another thing to think about is if you had the practice previously of referring to a particular percentage, maybe not having a particular percentage referred to in the gift agreement. Rather, the gift agreement might say that the community foundation has the ability to ensure that or to encroach on capital so that the disbursement quota obligation is met without referring to a specific percentage, because we don't know necessarily what's going to happen in the future. I mean, there's been changes with the disbursement quota over several years, but it might change again in the future, whether it goes up, whether it goes down, whether there's a different way it's calculated. So rather than referring to a specific percentage, that might mean you have to change the agreement. Having more flexibility is recommended. If you have existing agreements that refer to that 3.5% disbursement, that was the old language, it may or may not be a problem. If that fund is generating more than 3.5% and you have more income than you might not necessarily need to change that gift agreement, but it's probably better to have that flexibility to encroach on capital if the fund was underperforming. Then the question is, can you amend the agreement? Is there an amending clause in that agreement that allows for it to be amended? Without that amending clause, it can be quite challenging to amend existing agreements. But again, whether there's a desire to amend and whether you need to amend is two different questions. If I could have the next slide, please. So final thoughts on the new disbursement quota is that the new rate, the graduated rate, applies for fiscal years going forward. And we are expecting that there's going to be more details coming out from the CRA on what type of expenditures are eligible for charitable activities versus management and administration expenses. Whether that's going to be the guidance that we would like to see is another question. And we are expecting, because it's the CRA, what it's announced that its intention is that it will be looking to collect additional information, probably through the T3010 at some point, on donor advised funds and investment assets, but we don't yet have that. So we don't know what kind of information they will be seeking at on that. And if I could have the next slide. So I wanted to see if there was any questions in the chat. I know I saw at least one that
No,
Susan answered.
I think, yeah, there was one about land, which is required to be included in the calculation if it's not used in your charitable activity. There are some charities that may have farming land that are using it in their charitable activity, and in that case, they wouldn't include it in the bucket of assets that forms the basis of calculating the DQ requirement. But if it's just being held, it has to be included. And so the fact that it's not income producing is, as Sarah said, part of the issue you have to get your investment committee and others to sit down and think about is how do we generate the income we need to satisfy our disbursement quota.
Mm-hmm.
Does drive, looking at your investment diversification and ensuring that you're earning the right income, or potentially that you have the flexibility to encroach on capital again, as we've talked about.
Yeah. And of course, if it's land that's part of your investment portfolio, it's not easy to encroach on the capital of that, but
that's true. But
but
the other land,
it speaks to it's good rule to have a diverse portfolio, but there needs to be consideration not just in what's a diverse, prudent portfolio, but is it generating sufficient return on the whole to meet the disbursement quota.
And I think that's a really important piece, as we know that community foundations are seeing more and more complex gifts of properties coming in. And so when we think about that calculation, to know the importance of that and the long-term planning. There is
another question. Yeah. Sarah, do you want to, I think, take that one, or do you want?
Yeah, so the what year does
it's just the effective? Yeah, it's the effective date.
The effective date for the new disbursement quota, it applies to fiscal periods starting on or after January 1st, 2023. So it depends on when your fiscal year end is, but
yeah. You wouldn't disperse it in 2023. The 5%, right?
No.
You would use the 5% when calculating what you have to disperse for later years. Is that right?
Yeah.
Susan, I also just mindful of this discussion right now, and Sarah, you were very key in supporting us in creating a new fund agreement template. And in that fund agreement template, also, as you've noted today, the flexibility of not including the percentages. So just also want to encourage everyone to do definitely look in the resource library and explore that template that we have that's posted there, because it fits not to the complete new changes, but we did create this just prior to the changes that came out, and we don't have those specific percentages in that. So it's a great toolkit for the community foundations to have. Are there other questions from our beautiful souls that are with us today? Any other thoughts or questions? Mindful this is an everlasting, sorry, apologize for that, everlasting discussion item. And I say that as we know there's been lots of changes taking place and we're still working through some of the guidelines and the complexities, but really appreciate that we're able to hold space today. And if there are questions that come up, please don't hesitate to let us know. I know Susan, Christina, and also Sarah they have a lot of conversations with various community foundations as well. We are going to continue to be providing fact sheets and resources and additional learning experiences as we continue to navigate and gather more details on the various guidelines as they come out, if it's towards the final allocations of operating and management and charitable activity, or in other areas as well around the new legislations.
We might be back to talk about T3s, but hopefully not. Hopefully that will just be solved.
I am hopeful on that one, Susan. I'm hoping that when we get further news from CRA in the very near future, that it is just done. It's done. And we don't need to go.
Hopefully. I think as Sarah mentioned, though, the new T3010, which we won't, I mean, they told us today in a news release it's coming, but they don't have it there. I was hoping we would see a copy of it. It's probably going to ask for fund for, some, as Sarah said, some information, as Sarah and Christina said, like it's probably going to want to understand what kind of donor advised funds or funds. That's the question, is how are they going to describe what information they're looking for? But it's likely going to come, and it's going to be because they're the folks on the government side feel that there may be some way of using different funds to not meet the requirements fully. I shouldn't say they don't think people are doing anything wrong, but they'd like to know if it's because the funds are separate, that somehow it means less money is being spent or something, which isn't really logical, but that seems to be what they're thinking. So
there is a question from Jennifer, and I speak to this in regards to guidance. And so, Jennifer, we did acknowledge the concerns that we have in our recent newsletter, and we've also provided a copy of a template letter that can be used to support putting forward every community foundation's perspective. So if you take a look at the newsletter that we submitted out earlier this week, you'll see a copy of those details are there. And,
I think on this one, if by chance they came out and said T3s have to be filed, what we're thinking about internally, and I suspect your own accountants or lawyers will think about this, but I think what we'll have to do is come up with some kind of an understanding of when we would think a separate fund is truly a trust, and then, which ones you have to file a T3. So, I still, and I have been, it's been suggested to me I'm too optimistic. I still think this is going to be resolved. So I've been sort of saying to clients, it's okay, we don't have to do that analysis for every fund yet. But we will have to do it soon if we don't hear something. So, but the indications that I have had from the internal people at the government is very much that they do not want, they don't believe that the conclusion that every fund has to file a T3 makes sense, because if it's right, then it would sort of mean that every one of those funds also has to register as a charity. Like there's a logic that comes from that if it truly is a separate trust or taxpayer that needs to file a return, then each fund would be almost a separate taxpayer, which doesn't make sense and is not what, it's why we've never had to do this in the past. So anyway, but I think there will, we'll try to come up with some kind of a checklist for our clients that says, if it looks like this, you might have to file. And if it looks like that, you wouldn't have to. But certainly, I think you'll find that there will be lots of information out there and on that if that happened. But I'm very hopeful. I'm the eternal optimist, though. So
And Susan, I hold the space for your optimist and I am your outlook, because I'm mindful of the work that we've been doing in our advocacy work and so many others that have said, yes, this is really critical and important. We will continue to update the network too as well. So Jennifer, I'm mindful of the planning stage that may need to be implemented. And we are really mindful. We have community foundations that have from say 20 funds up to 7,000 funds. So this is a very, very big issue that we're facing, and we're continuing to speak to government. And Andrea, all of you know, her voice is also loud, working with Susan side by side and with others. So we will continue to keep you updated. So if you we're hoping, as Susan's mentioned, that we're going to get really positive news very, very soon. And as soon as we get it, you will see it come out to you. We were hoping today was positive news, but unfortunately not quite. Oh. I want to express my deep gratitude again to Christina, to Susan, and to Sarah. Thank you so much. And I'm really mindful of the uniqueness of community foundations, the work that's underway. We've got community foundations that have maybe one team member that are managing all of this. And we have community foundations that have larger teams, and they're still managing and they're navigating as we go through this journey of change. The three of you continue to guide us and support us, and I'm very, very grateful. And on behalf of our network and CFC, again, I share my gratitude to each of you for your care and your kindness as we continue to move through this journey of change. And as we get ready to take a pause following today's webinar, we do have a poll that we would love for each of you to share some moment of reflections. So if you can complete the survey on the poll that is just up, please take a moment to do so before everyone signs off today. This supports us to ensure that we are continuing to deliver what is important to you and essential in the work that you do within your foundations. Please also as well continue to join us for future events. Next week, we have a webinar on how to use technology in your community to your community foundation's advantage. So it's a great opportunity of continuing to develop and learn and to bring systems and change into your organization. Please also continue to watch our events page and follow our newsletter for up-and-coming activities, events, and resources. And if you haven't opted in as of yet for the internal newsletter, please do so via the link that's in the chat at this time. And as we get ready to close off, again, thank you, everyone. Thank you for taking the time to lead and to be part of today and to continue to navigate the changes that are happening with such care and kindness. We're mindful that there's a lot of things happening within your organizations, and you continue to be present and be part of these sessions with us. I'm very grateful for you for doing so. So as you prepare to go on to the rest of your day, please know that we're with you and look forward to seeing you at the next event. And please reach out at any time. All the best, everyone. Take care.
Bye, everyone. Take care. Have a great rest of your day.